Hello, welcome to the European Open briefing for Friday, June the 9th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So the main news this morning is, of course, the UK election result, which has proved to be another shock for the UK. Theresa May's Conservative Party has lost their majority in Parliament. They are still the biggest party, but it looks like they will be on set to they seem to be heading for a minority government, and as a result, the pound has tumbled by 2% in the currency markets. Although outside of the UK, there's been limited reaction in financial markets to those election results. We're actually seeing some improvement in risk sentiment, mainly due to the former FBI Director James Comey's testimony in Congress yesterday, where he actually stopped short of accusing President Trump of obstruction of justice. So there was some relief in the markets. We're seeing the dollar a little bit firmer this morning. We also did have the ECB meeting yesterday, where the European Central Bank dropped its guidance that it could be cutting rates further. But they did downgrade their inflation forecast, and that did hurt the euro. The euro is actually struggling to climb back above the $1.12 level this morning. But let's start with the pound, because we can see there that big drop that came as soon as the exit polls came out after voting closed yesterday in the UK. The exit polls were pretty accurate. They did show the Conservatives on track for 315 seats. That's actually short of a majority they need of 326 seats. It's sort of stabilized a little bit, but once the full results started coming in earlier this morning, we saw further falls in the pound. It dropped below the 1.27 level. That's a 7-week low. So the pound is still stuck around 2% low this morning, and as I said, the UK is heading for a hung parliament. Theresa May was hoping to strengthen her negotiating hand as she heads into the Brexit talks with the EU, but her gamble doesn't appear to have paid off. But there is some positive outcome for this, at least for UK equities. The FTSE 100, although the FTSE futures did point to 1% drop in the share index, it's actually open sharply higher now because of the drop in the pound, which is boosting mainly internationally listed companies on the FTSE 100. So let's have a closer look at the UK elections. We have about 4 seats to go that haven't been declared yet. The Conservatives look set to get just 318 seats. That's down on the 330 they got in the 2015 elections when David Cameron got a surprise majority. There was one of the reasons why sterling hasn't dropped even more is because the results mean that we can rule out a coalition between the Labour, the Scottish Nationalist Party, and the Liberal Democrats. So that would have been the worst outcome for the markets. But given the number of seats that those three parties got combined, it's looking very unlikely that they would be able to form a coalition. So we are heading for most likely a minority Conservative government with support of the DUP party, which is the Democratic Unionist Party in Northern Ireland, who have 10 seats. So together that would just give them a majority of just a couple of seats if the Conservatives do get 318 seats. But there's still uncertainty, of course, because we don't know whether or not Theresa May will stay on as Prime Minister. She is actually due to speak at 09 hours GMT. And she may resign, and that could lead to another leadership contest. That could potentially lead to delay to the Brexit talks. They are scheduled to start on June the 19th, and it could also potentially lead to another snap election within the coming months. but although other parties have called on Theresa May to resign, we are reading some reports that Theresa May will probably stay on as Prime Minister, given the critical time at the moment as the UK begins Brexit negotiations with the EU. Look, moving on to the dollar has actually doing better this past few days. It's been steadily climbing since midweek. It's currently back above the 110 level against the Japanese yen. We had James Comey's testimony before the Senate Intelligence Committee yesterday, where he was asked about his conversations with President Trump regarding the investigation into Michael Flynn. He's the ex-National Security Advisor. He was accused of making contact with Russian officials during the campaign and lying about it in Senate. But the main focus was, of course, whether or not Trump did ask Comey to drop the investigation. And Comey did confirm that, but he did actually stop short of accusing Trump of obstruction of justice. Although Trump isn't out of the woods yet, I mean, this could still potentially lead to further trouble for Trump. But for now, there appears to be little imminent concern about any impeachment for President Trump, so that has led to some relief in the markets. That's why we're seeing the dollar climb against the yen. And so now that this testimony is out of the way, the focus is moving on to the Fed once again. We have the FOMC meeting next week on Tuesday and Wednesday. The markets currently see a 95% probability of another 25 basis point rate hike. But it will be important what the Fed will say at the June meeting, because there are some concerns that the growth isn't strong enough to justify a third rate hike this year. So if the Fed signals that a third rate hike is looking less likely, that could lead to weakness for the dollar down the line. And talking of weakness, the euro is actually under pressure at the moment. We had the ECB meeting yesterday, and although the ECB did raise its growth forecasts for the eurozone, they did lower their forecast for inflation. Draghi said that there has been no substantial change in underlying inflation, and it's expected to rise only gradually. That signals that the ECB will probably be maintaining monetary stimulus for some time yet. And Draghi also confirmed that the Governing Council did not discuss tapering at the June meeting. So the focus now is on the September meeting. But for now, the euro has actually lost some of its shine. It's currently trading below the 1.12 level against the US dollar. And a quick look at commodities before we go. We're seeing oil prices still under pressure. They touched the 5-week low, or at least Brent crude did. US crude is doing a little bit better. We had, of course, on Wednesday the surprise increase in US crude stocks, and basically we're just seeing more and more signs of continued global supply glut, and that's keeping oil prices. It's actually taken oil prices to back below the OPEC deal was announced in late November. And in gold, we did see a drop in gold prices after Comey's testimony. It did rise a little bit after the UK election results, but it's come back down again. So overall, the impact for the UK election results is seen as being limited to the UK, and gold is currently at around 1-week lows at $1,273 an ounce. And look at today's economic calendar. We had producer prices out of China, which were weaker than expected. Inflation, on the other hand, month on month did fall less than expected. So on the whole, it does appear that the reflation cycle in China is easing. We also had trade data out of Germany, which was much better than expected, both for exports and imports. We're going to have UK industrial output and manufacturing numbers due shortly, though they are likely to have much impact on sterling, given that the focus attention is now only on the UK elections. It's going to be a fairly quiet US session. We're just going to have Canadian employment numbers, but nothing major out of the US. But we should be watching Theresa May's speech at 09 hours GMT, where she will most likely announce whether or not she'll be staying on as Prime Minister. That's it from me. Thank you very much for watching and have a great day.